Be Wealthy and Smart, episode 1040.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about why existing home sales fell in April, and this is to the lowest level since the start of the pandemic. There were some statistics that came out last week, and I thought it was important that we cover it. We're starting to see some changes in the market, and while I still don't believe that we are going to see a crashing real estate market this year, it is important to take note of the things that are changing and what's happening in the market so you can stay on top of it and know the most important recent information so you can make the best decisions. And this article comes to us from CNBC and was written by Diana Olick. And she says sales of previously owned homes in April fell to the lowest pace since the COVID pandemic started, according to the National Association of Realtors, or NAR. Existing home sales declined by 2.4% compared with March to a seasonally adjusted annualized rate of 5.61 million units. That means sales were 5.9% lower than in April of 2021, and it's the slowest rate since June of 2020, which was artificially slow since the economy was struggling with sweeping shutdowns due to the coronavirus. She also notes that the average rate on the 30-year fixed mortgage started in February at 3.66% and ended in March at 4.78%, according to the Mortgage News Daily. It's now hovering around 5.45%. So I want to pause there. That's almost 2 full percentage points above where we were in February for mortgages. So while 5.45% is still historically low in the grand scheme of interest rates and interest rate cycles, really anything under 8% tends to be considered to the lower side, it still is a huge jump from where we were. People have to adjust to that shock that they can't buy as much house, because that's really what happens when interest rates go up. You can't afford to purchase as much. Your payment obviously goes more toward interest, and so you can't buy as much house as you could before when interest rates were lower. That's why when interest rates are falling, housing prices tend to rise because people can afford to buy more house. And just the opposite is occurring now. As interest rates are rising, people can afford to buy less of a home, which means that either they're going to have to negotiate prices downward if it's a buyer's market, or they might be having to wait longer to find the right priced home that they can make an offer on. The article goes on to say, we are moving back to pre-pandemic sales activity, but I expect further decline, said Lawrence Yun, chief economist for NAR, citing that rates are now higher than they were when these contracts were signed. Not only are buyers contending with higher rates, but they saw very little relief in the shortage of homes for sale. Inventory at the end of April stood at 1.03 million homes for sale, which is down 10.4% from April of 2021. At the current sales pace, that represents a 2.2-month supply. And that tight supply kept home prices higher despite rising interest rates. The median price of an existing home sold in April was $391,200, the highest on record, and an increase of 14.8% from a year ago. So the interesting thing is we're seeing kind of a two-tiered market where we're seeing high-end homes react one way and lower-end homes react another way. According to this article, sales of homes priced between $100,000 and $250,000 fell 29% year over year, while sales of those priced between $500,000 and $750,000 rose 19%, and sales of homes priced over $1 million increased 16%. And when we look at how long is it taking for homes to sell, well, the average home sitting on the market is just 17 days before going under contract. And there were 25% of sales made with all cash offers, and investors made up about 17% of sales, and first-time buyers made up just 28% of sales. Historically, first-time buyers generally make up about 40% of the market. One of the important home indicators to look at is new construction, and sales of newly built homes for April are going to be reported next week. But mortgage applications for those homes dropped nearly 11% during the month compared with April of 2021, according to the Mortgage Bankers Association. And new home purchase activity declined on a monthly and annual basis in April as the spike in mortgage rates cooled demand and home builders continued to grapple with rising costs, supply chain issues, and extended completion timelines, said Joel Kahn, MBA's Associate Vice President of Economic and Industry Forecasting. And he's predicting new home sales will fall for the 5th consecutive month to the slowest pace since May of 2020. So there we can see some real slowing, some change in the demographics. Some of that is due to the continued tight supply in the market, but most of that is due to the shifting interest rates since that was so dramatic. Now, it's hard to really generalize about real estate markets because there are so many differences regionally and even by state. And so much is also being influenced by state income taxes, where states that have high state income taxes are seeing outflows, and those states that have no state income taxes are seeing the big inflows of population. But it seems to me that higher interest rates are going to slow demand a little bit, which is going to allow it to catch up a little bit more with supply, because supply has been the issue for quite some time. So now we're seeing a little bit less demand since interest rates are higher, and maybe people are shopping longer, but we also are noticing in certain markets, high-end homes have had price cuts. So we'll see. Again, I don't think there's going to be any kind of a crash in real estate this year. I do think that we're working through the system of higher interest rates now, a little bit less demand, a little bit more supply, and that's good because we need to get the equilibrium back together so that we're not just in all this high demand and low supply situation. So it seems like we're working through a little bit of that. We're starting to see a little bit of the ship turning that way, and I wanted to report that to you. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.